Hello, today is the 11th of July 2011 and a quick intraday update. Silver currently at $35.85, and that's not currently. This is at noon Eastern Time. Markets are getting a little bit volatile, but still trading within the sideways correction, indecision. So we're still there. On the daily chart, it's moved back down towards the 18 period average of highs. Now, this average is front weighted, but we've been seeing below, above, within, below, and then it got above it, then below it, then it's now above it, now it's at it. A lot of indecision. It still has to get above the significant resistance level for me to have any bullish sentiments, but at the same point, it's got to break support for me to have the bearish sentiments. Yes, the sentiment overall still neutral, but I'm liking the way things are transitioning within the market. Now, as far as the quarter day chart, the 6 hour chart, this goes from 12 to 6 or 6 to 12, and we had a decent sized volatile move, and this started at 10 o'clock, really. The top wasn't, it was earlier before then. However, the trends are different. It used to be that the big selling would occur in the morning, usually between 8 and 10. Now it's starting at 10 o'clock. It's about a 4% move, but it has managed to come back to this Fibonacci level, which is that of 35.53. So it's come down towards that area. It has bounced from that area as of now. It's got this rising moving average. Thus, this rally has become very cautious, and I'd be getting a little concerned breaking below this level. And then you got this previous resistance here, roughly around the 50% Fibonacci retracement in or around the 35 level. The Fibonacci mark before that is at 34 and 2/3. Now, as far as the big volatility moves are concerned, this move top to bottom was 4%, which is a very decent size move. It looks like the biggest one on here since, well, even back into here. A decent size volatile move. And this has made this volatility chart that I've come up with start to show a pattern of reversing the trend. This orange line, which represents the 20-day moving average of volatility, the blue line represents the 5-day moving average of volatility. Showing this sideways movement, the orange line is on the process now of flattening out roughly around this 1.33% mark, and just something to look out for the markets to move back to a more volatile state. However, with that being stated, we are also in the areas that we were in before all of the big things came into play, and normally when the volatility is higher, that's normally going to bring lower markets. However, like I've been stating, normally at 10 o'clock the selling settles and the market goes higher. At 10 o'clock this morning, the rally stopped and the selling began. And at one point, I do expect these big moves. I've said this before. I don't know why I even say that, but what I mean, I don't know why I say I've said it before, but there will most likely become a time where this volatility will just massively go higher, and that will bring the markets higher. But now that I've said that, when I see this go up maybe 9 times out of 10, only one of those times, maybe two, will bring higher markets and the rest will bring lower markets. After all, normally when this is going on, this creates higher markets. Now, that didn't happen either. So, all right, thank you for watching. This is longer than I wanted, but I wanted this short, and have yourself a great day.